Salesforce announced its Q4 fiscal 25 earnings last night. Overall, a lot of single-digit growth, a lot of growth that where there was double-digit, it was kind of on the short side of that. They missed in several areas, right? They missed what analysts were expecting, specifically around the guidance that they gave. They have some momentum, but not the momentum that they need yet tied to Agentforce and AI deals. And ultimately, it's really going to come down to this. Benioff and Salesforce wants to have every customer on Agentforce. They want to be the number one digital workforce provider. And there's a new buzzword, the Holy Trinity, the Trinity, right? So think of that as applications or Customer 360 or CRM plus AI plus data. Now, Benioff has been setting this up over the last year or so, but this is the new buzzword that all customers need to start paying attention to. Now, I'm not going to go too deep into the numbers. You can look at a LinkedIn post I put up there last night with a lot of those details. You can certainly go even deeper if you'd like to. I implore all customers to at least have a foundational understanding. That's why I put those posts up there. So I'm going to hit some of those numbers, but I'm really going to dive into what is said on the earnings call and where are they clearly going to be focused if you're a customer. So full year FY25 revenue, 37.9 billion. Subscription was about 35.7 billion of that. That's 9 to 10% growth. Q4, they missed. They came in at about 9.9 billion or 10 billion, 8% growth. Analysts were expecting it to be more like 10.04 billion. It's not a massive miss, but a miss. $900 million was tied to AI and Data Cloud. So they put that number out there. It's short of $1 billion. Trust me, Benioff needs that number to be moved from an M to a B. And that's obvious. That's 20% growth. They had 3,000 paid Agentforce deals in Q4. 5,000 customers, 3,000 are paying. I'm going to get to that in a minute. They're not going to report the revenue on that. I don't expect them anytime soon. And there's a reason why. In terms of guidance, I just talked about this. Q1, FY26, short of what analysts were expecting. They're thinking it's going to be 9.71 to 9.76 billion, 6 to 7% growth, so single-digit growth. Once again, kind of more towards the middle or low end of that. Analysts were expecting 9.91 billion for the full year. 40.5 to 40.9. So yes, they've clipped 40 billion. Growth is 7 to 8%. So again, single-digit. Analysts were expecting 41.37 billion. Right. So here's the thing. Weaver got ahead of this, right? CFO, she's departing soon. This is going to be Robin, which is, by the way, COFO. So Milham's leaving. She's going to kind of take both roles, which is a whole other thing, which I've talked about. But the bottom line is why? Like, why are we missing? Why are we getting ahead of it? Well, the number one thing, besides professional services revenue not being what it wants to be and some of the tailwind, it's really about this. We put a lot of energy into getting Agentforce, getting AI, which comes with Data Cloud, or at least that's how they pitch it, adoption, these consumption-based products. But she said, customers, this form of revenue is not going to have a big impact on our FY26. In other words, we're not going to get a lot of big deals, even though they're paying yet. But she said there's going to be momentum, there's going to be traction that's going to impact FY27. So if you think about this, customers that are out there thinking about adding Agentforce or going to add Agentforce, whatever it may be, Salesforce wants to get as much volume commitment, sell you on everything you need because it's going to be very productive, efficient, and ROI right out of the gate. So you got to buy a lot of conversations, simply put. I don't think customers are buying that yet. They may taste it, right? That's why the revenue's low. So even though it's expensive, $2 list price per conversation rather, they're not getting a lot of it and they don't expect that momentum to build. But until later. But if you're a customer, you better make sure you have the right upfront price. That's table stakes. You better make sure you have renewal protections. But consumption-based, number of conversation, what's a conversation? You need to get on top of that. Volume discount structures, those have kind of fallen to the wayside because headcount weren't really growing, right? COVID and other reasons. But you better have volume discount structures as part of your discussion. And make sure they understand you heard what Benioff said. We want every customer on Agentforce. Without Data Cloud, Agentforce isn't as valuable, right? So Explain that to me. That means I have to buy Data Cloud? That's consumption-based. What's that cost? What does that mean? I heard you say that Holy Trinity, CRM or apps plus AI plus Data Cloud. If I'm giving you that, that's hugely valuable. I need the right proper protections in place beyond just additional discounting, right? Consumption model. There's a problem there, the flywheel effect. Put that in front of them. Let them know you understand. Put Milliham's quote out there that said initially it's consumption-based, but we might be going to a universal credit because it's going to be more flexible. That's problematic. What does that mean? What should I expect? How do I get ahead of that? Obviously, we're talking to customers right now to get ahead of that for them, but you should be putting Salesforce in a box to explain that too. Now, let's not skip over some of the products themselves. It's not all about AI and Data Cloud, right? Sales Cloud, Service Cloud, Platform, Marketing Cloud, Commerce Cloud, MuleSoft, Tableau, Slack, right? These products. Number one, if you look at the growth rates, which are pretty not significant, that they had in FY25, and you compare it against the FY24, they're decelerating, okay? That's big. They can't have that continue to happen, especially if they want to continue to grow, especially now that they put a $60 billion total revenue RPO number out there. They want to continue to extend that, right, through consumption over term, through in-term deals, through AI adoption, so forth and so on. Industry clouds, they're absolutely going to come after you if you haven't converted yet. They need you to go to industry cloud. There's a bundling effect to that. There's a stickiness to that, and that's going to how they're differentiating themselves. Products coming, Tableau next. Benioff talked about this. If you're a Tableau customer, get ready. Get ready. Metric changes, product adopt. There's a whole host of things you need to get ahead of. Benioff threw out there a new ITSM product. Interesting. ServiceNow starts talking about CRM, and Salesforce starts talking about ITSM. Something's going on there. Need to get ahead of it. And then at the end of the day, if you're a customer and you're listening to what's being said, you have to understand this is coming. If you're not ahead of it, understand unified communication plans, understand planning and purposes of, I'm interested, but what does that mean contractually, commercially? They're going to ultimately win. They just will. But there's an opportunity to also take this neediness and transition it to the right deal, not only with what you may consider new AI, Data Cloud, Industry Cloud, but right-sizing what you already have. You're not getting the full value out of Marketing Cloud. You overcommitted on a GMV for Commerce Cloud. You're paying too much for your Sales Cloud Unlimited Edition. Whatever it may be, use this opportunity because this is the time you can do it.